All right, I think we can get started here. Hello, everybody. Welcome to today's webcast. My name is Chris Glendening, Senior Director of Marketing here at Hashdex. Today's webcast covers the inaugural Market Pulse, a quarterly report produced by our research team in coordination with our investment group. Joining me to discuss the quarter is Pedro Lapenta, Head of Research, alongside research analyst Lucas Santana and Yuri. Gentlemen, thank you for joining me. Before we jump right in, some housekeeping items. First, to disclosure. This webcast and its corresponding presentation are for information purposes only. This presentation is not an offer to buy or sell, nor is it a solicitation of an offer to buy or sell. Certain information contained herein constitutes forward-looking statements. Due to various risks and uncertainties, actual events or results and the performance of the products that may be mentioned may be substantially different from those reflected or contemplated in such forward-looking statements. As a result, investors should not rely on such forward-looking statements should there be making any investment decisions. Second, there will be a Q&A after the call, so please feel free to put your questions in the Q&A function at the bottom, and we'll get to that at the end after we make the presentation. With that out of the way, let me turn it over to Pedro Lapenta, our Head of Research, to go through the Market Pulse report.
Thank you, Chris, and welcome, ladies and gentlemen. Thank you for joining us today for a global institutional call. At Hashdex, we pride ourselves on being, the forefront of market intelligence and research, ensuring our clients that are always, well informed and equipped to navigate this, ever evolving and sometimes confusing crypto market. With this in mind, we're bringing to you today our inaugural quarterly report called Market Pulse. The idea of this report is to help you guys understand what's going on in the markets in a concise way, in a compiled way, yet insightful, dynamic. We hope this document will help you do that. In this report, we're providing a thorough analysis of the market trends, metrics, and trends that are happening in the most important digital assets. We're giving a special focus on the NCI, the Nasdaq crypto index. That's the benchmark of our most important products here at Hashdex, and with a special focus on Bitcoin and Ethereum this quarter. And everything that is going on, we help you. We want you to separate, with this report, so you can separate the noise from the signal. So that's our main goal here. And with that, I will begin the presentation, and you can all download this report on our website. You can go to www.hashdex.com and look for insights, and then we have the primers there, and we'll see this report at the front page of the site. And with that, let me just get started. So just as you guys all Hashdex is here to bridge the gap between traditional financial markets and the crypto economy, offering simple, secure, and trusted vehicles for the traditional investor. As Chris already pointed out, it's going to be myself, Lucas, and Yuri. And the agenda for today, we're going to give you, a 30-minute presentation on the slide deck. You can read it on your own time, but we're just going to give you an overview. Also, last week actually, we saw the most weighted Shanghai update on the Ethereum network. We're going to talk a little bit about this topic at the end, and then we're going to open for Q&A as we think this is the best approach to go. With that, we're just beginning from a macro view, right? We've talked about this in the two previous global calls and our local calls here in Brazil as well. But crypto assets in general had a tremendous yearly performance. It was led mostly by, until the end of the first quarter. This is numbers for the first quarter of 2023, which ended in March 30th, right? So until then, the leading performer was Bitcoin, and it surged close to 70%. year to date, and we saw, and we're going to talk about in the next slide, the correlation to the current markets and the three phases that we saw, January, February, and March. But the message here is that crypto assets performed extremely well, along with other risky assets such as the S&P 500 or the Nasdaq, but much more, right? And this has some explanations to it, and one of them is that we'd like to highlight is that since the banking crisis in the U.S., which has spread to Europe, and we're seeing this topic coming back again, especially Bitcoin, since it has this store of value dynamics behind it, has seen a tremendous growth, as we can see from the graph here. At the beginning of March, crypto assets coming down. Gold is pretty much performing close to zero on a year-to-date up to that point. And then since then, we're seeing gold coming up. It's now close to 10% up. And then we're seeing, this explosion of prices in digital assets, especially Bitcoin, performing extremely well. And in April, we've seen, the shift change to Ethereum. We're going to talk about it, as the Ethereum Chapella upgrade went really well, no issue whatsoever, and it's been outperforming the other crypto assets. Ether has been outperforming the other crypto assets, right? So as I mentioned, we can see there's there's three phases of correlation. This is something that we're bringing to your attention, as last year with the markets suffering a lot with the shift in monetary policy worldwide, and especially in the U.S., the largest market in the world. We saw all these digital assets suffering, right? On top of that, obviously there were micro issues within the crypto asset space, but that's a little that's behind us, and it affected prices a little bit in 2022, but most of the prices coming down were driven by this shift in monetary policy. And then we saw that in from January to October, correlations of digital assets increasing towards digital assets, especially Nasdaq and S&P, right? And then from November to February 2023, a lot was correlated with the FTX debacle. The issue that it was a big surprise to the market, but it was at the end of the cycle last year, and then we saw correlation kind of reducing or staying flat a little bit, and then from now on this year, with this issue, as I mentioned to you, regarding the banking crisis in the US, and then with the spread to European banks, with the Credit Suisse UBS merge, we saw this rush to BTC mainly, and with gold, right? But with investors seeking a safe place, or a fixed supply asset in the case of BTC, and a store of value in the case of gold, right? So again, as we've been talking about, BTC is not yet a store of value. We see it as an emerging store of value, because it has characteristics to be a store of value, but it's not as long as gold. It's not been around as long as gold. It's not widely adopted worldwide as gold is. But we saw this huge flight to quality within crypto space, into BTC, as it outperformed. We're going to talk about it a little bit later. And within the broader market, gold also performing well. In this slide, which we try to bring you the most top-down metrics into the crypto space. The message here is that in terms of the total market capitalization of the crypto space, and that includes stable coins, right? All the digital assets. Remember, there are more than 25,000 digital assets and cryptocurrencies. There's obviously a long big concentration in Bitcoin and Ethereum, as you can see here. But the total market cap in the first quarter of 2023 surpassed again the $1 trillion mark. It's close to 1.2 at the end of the first quarter, and we're seeing now in this first days of April, it's blowing closer to 1.3. Right, it's still way below last year's high, which is a year ago was about $2.2 billion, and we even saw it getting closer to 3 trillion. But it's on a recovery phase, right? And that the same applies to Bitcoin and Ethereum, as we mentioned. These are $550 billion market cap for BTC, $200 billion for Ethereum. And the stable coins, this is one of the interesting facts about this market, right? The stable coin market cap didn't suffer as much, right? Since when markets were down 50, 60, 70%, the stable coin market cap, which is the sum of all the stable coins issued in crypto rails, in blockchains, didn't suffer a lot. So there's only, for instance, a close to 25, 30% decline. But when the markets were down much more. And another aspect which is pretty interesting, although it's on a recovery phase as well, in part because of prices picking up, and part because of activity, is the TVL, or total value locked in these protocols, in these blockchains, right? So we're back to 75, 70, $80 billion at the end of the first quarter of 2023. We've reached way above, above $200 billion. But it's on a recovery phase, and it's on a recovery trend, and that's part of what the message that we want to send. And two of the last metrics that we brought to you today is, and they have a different circumstance, right? It's the Bitcoin addresses with non-zero balances, and Ethereum addresses with non-zero balances. On a year to date, we're seeing this despite all this market turmoil, micro and macro, we're seeing a 10% growth in Bitcoin addresses with non-zero balances, and close to 25% growth in Ethereum addresses with non-zero balances. So this is an interesting metric. People are engaging with the technology. People are transacting more. New people are coming in, and this is something that we are paying attention. And this is part of this crypto metric that we would like you to, from a quarterly basis, pay attention to. Two other metrics that we'd like to show you in terms of activity, right? And remember, we had this FTX episode, which made a lot of people, investors, developers, users, they were afraid because we didn't know what was going on. It was a kind of an ugly situation. And active daily users, which had, were passing through the 5 million barrier before. It went down at the initial phases of the FTX issue, but we're seeing, we're back again at numbers a bit above 5 million daily active users. That's the same impact with daily active developers. This is something that we can measure on this activity of the number of developers in several chains, and we've seen an initial drop after the FTX problem, but we're now back at previous levels. So this is just to show you the health of the system and how it's responding to all these issues that happened last year. In terms of market dominance, right? This is the share of each crypto asset in relation to the total market capitalization. As we've shown, this has been mostly until the end of the quarter, a market with the Bitcoin outperforming a lot, and naturally the dominance, right? This ratio of Bitcoin's market cap to the total market cap of the industry has increased a lot. Over the long run, we expect this to come down, but since this is a Bitcoin moment, a moment of store of value, we've seen that increase a lot in the first quarter of 2023. And also on the back of all these regulatory crackdowns that you've seen in the US mainly, and with the Silicon Valley crisis, the circles with who's the issuer of USDC, the second largest stable coin. You had the temporarily depeg that solved afterwards. Tether, which is the issuer USDT, gained share. So it's after the problem with USDC, it saw huge inflows, and it going from close to $65 billion of stablecoin outstanding by Tether to close to $80 billion. So its dominance has also increased. Two other metrics that are important to highlight here. Again, the TVL that I mentioned at the beginning, most of that TVL growth dominated by Ethereum and its scaling solution. What that means is that, remember, Ethereum was suffering at the end of 2021 with its strong growth, and gas fees were super high to transact on the network. It was becoming a little slow, and several solutions are emerging, such as rollups and sidechains, and we're seeing a lot of TVL being locked into these solutions, which is, it's a proof that these solutions are picking up in activity. So this is something to pay attention as well. And lastly, Uniswap, as you guys know, the decentralized exchange, most important one, had an interesting figure, and we're bringing it to you. It had the best daily traded volume in this first quarter. It reached $12 billion of traded volume. This is really, really important. It's a big number. It was a one-off though, but we're seeing as part of measuring the activities of these networks and what's going on. It's an important metric to pay attention to. As part of the report that we want to convey to you, which we think from a broader perspective is very important to understand, and this is still mostly on the qualitative side. This is we're bringing to your attention some major announcements by big companies, by big players in the traditional world, which shows strength in institutional adoption, right? So we think this is a topic to be paying attention to. Traditional players, investing, hiring people, bringing solutions for their traditional business within Web3, within blockchain solutions, and using sometimes crypto is a sign that the thesis is playing out, right? So we're seeing Nasdaq, the most important technology exchange in the US, and the provider of the Nasdaq crypto index, applying to a custody service in this first quarter of 2023. This is a major player stepping into a critical aspect of the infrastructure, which is the custody of digital assets. It's going to help other on board into crypto, into blockchain, because there's a big name such as Nasdaq getting involved with it. Adidas and Tommy Hilfiger also, they're launching the Metaverse Fashion Week on Decentraland. And this is a sign of other, several global brands and important consumer product brands getting involved with Web3 and crypto for their day-to-day business in engaging with clients and customers. So another interesting aspect, which is coming out of Argentina, which has a kind of a very robust developers and venture capital community. Flybondi, it's the Argentina low-cost airline is integrating Web3 into its ticketing process. So basically, every single seat on every single flight will become a non-fungible token, an NFT, and it could be traded, it could be transferred, it could be negotiated in exchanges, and this is a pretty interesting experiment that has the potential to go global. Siemens, again, European conglomerate, issued the initial digital bond on Polygon this quarter. Starbucks extended its loyalty program to Web3 in Polygon as well. Very interesting. This is one of the most important loyalty programs worldwide. So, and with millions of users. So this is something very, very, we think, engaging and promising from a institutional adoption perspective. And AWS, the Amazon data centers and cloud services providers partner up with Avalanche, a layer one, to offer government related data storage. So this is another sign of the integration between blockchain solutions and Web3 with traditional companies. So this is the message that we wanted to convey from a broad perspective, looking top down in terms of, volumes, in terms of market cap, this institution adoption, some information related to DeFi. And we're seeing a pickup in volumes, pickup in market cap. We think, last year was really, really bad, but it's the market is still developing several solutions. Active users are there, developers are there, so we think we might have made a bottom last year, and we're up to a recovery phase now. With that, we're going to ask Lucas, our research analyst, to provide you some updates within the Bitcoin ecosystem. Please, Lucas.
Yeah, sure. Thanks, Pedro. Before I dive into it, I'd like to remind everyone that we have the Q&A, so please feel free to leave your questions there, and then we address them once we finish with the presentation. So I think going really quick over Bitcoin, so we can see, and Pedro already talked about this in the beginning of the presentation, we have seen this outstanding performance of Bitcoin in the first quarter of 2023. For January, you almost have like 40% of upside, and then we stayed in this sideways range over the course of February. And then at the beginning of the first third of March, we see these small correction. Then the banking crisis happens in the US and Europe. And then we see this huge spike up as we what believe is again strengthening the fundamentals of Bitcoin as this emerging digital store of value. And this is on the price section, I think, for BTC in these first 3 months for 2023. And in the next slide, I think I'd like to bring some fundamentals. And the first one, which I find really interesting, I'd like to point that out, is that now we start seeing more utility coming to the flagship blockchain in the market. So in this quarter, we've seen the surge of so-called NFTs on Bitcoin, which are called inscriptions. And essentially, they allow you to store an image, a video game, a song, or even whatever kind of digital unique asset into the Bitcoin blockchain. And as a consequence of that, we've seen after roughly 2 years of reduced activity and reduced miner fees coming from Bitcoin users, a spike up in transactions in the Bitcoin base layer. And also, again, this brings more activity and as a consequence brings up fees that are paid to miners. The importance of that is basically that we believe that over the long haul, Bitcoin will need to have more activity on chain so that fees go up and the mining industry can be sustainable only by the fees that users pay to transact on the network. And this is the kind of new utility that comes to the Bitcoin base layer that really has the potential to bring these fees up and make the Bitcoin network even more long-term sustainable. The next slide, we also show, again, after a year-long increase in hash rate in this quarter with prices increasing again for Bitcoin, we see the hash rate keeps going up. And as we always say, the more hash rate, the more computational power to secure the Bitcoin network, the better it is for it to be unfraudable, for the transactions to be immutable, and for the largest blockchain by market capitalization to remain secure. And we actually hit new all-time highs for hash rate. And we can always say that a Bitcoin is this most powerful and secure network worldwide, right? And the last metric, which I find interesting always to keep a close eye on, is the Lightning Network, which is the leading scaling solution for Bitcoin. And what you can think of it as basically this way of doing Bitcoin fast and cheap payments without really bringing a huge bottlenecks to the base layer. And as prices went up in this first quarter, also the liquidity to do micropayments on this layer 2 for Bitcoin also grew. So I think it's very positive in the sense that now more people can use and transact in USD value over the Lightning Network, which we expect to continue to climb higher as we move on. I think the next slide will basically show like a big summary of key metrics for Bitcoin. I think if you guys can later open the actual report and look at this, I think overall, most of these are quite positive, the price related ones. And if we think of the fundamental related, like hash rate, active addresses, on-chain fees for miners, the Lightning capacity, and even the number of coins that are being held for 6 or more months by Bitcoin investors, these numbers have been growing over 12 months, and most of them are also growing year to date. So I think this is, again, showing the strengthening of the Bitcoin case. And I think we expect this to continue happening as we move into 2023 and beyond. Right now, I think I hand it over to Yuri so that he can talk a little bit about Ethereum. So
thank you, Lucas. And yeah, thank you, Lucas, and thank you all for being with us today. I'm thrilled to be here to discuss the first quarter of 2023 in relation to the native token of the Ethereum network, namely ETH. And on that note, it's just funny the way that crypto works sometimes. I'm about to go over how an asset delivered more than 50% of returns over a quarter, and that somehow entails an explanation for us to be bullish on it. But yeah, while Ether's 51.7 performance may seem a little bit lackluster compared to BTC 71%, there are several compelling factors to reinforce the investment thesis for ETH. Firstly, the development of layer 2s, or simply scaling solutions. It has greatly enhanced the network scalability. This, in combination with a deflationary character of ETH throughout the quarter, coinciding with a heightened network activity in what was the impending release of major Shanghai update that we just got recently. They were all significant drivers that signal a more secure and potentially higher upside bet for ETH. And now, if you consider that ETH lagged behind BTC in this last quarter as far as prices goes, that layer 2s can potentially mean higher network activity, which leads to higher burn rates for ETH in a higher fee market. And Ethereum's former competitors that are starting to settle for building atop of its base layers with the scaling solutions, instead of competing with the flagship blockchain. It is due to all of those reasons that we have the belief that the price behavior of ETH in this last quarter might present a great long-term opportunity. Next slide, please, Chris. For Lapenta. But yeah, like as I had mentioned before, as far as fundamentals goes, the new trends in crypto are mainly the so-called layer 2s, or as we also call them, the rollups. These scaling solutions, they facilitate the onboarding of both applications and users. For those users to interact with the Ethereum network and use said applications, they will need the native token in order to settle these transactions. So yeah, we believe that layer 2s and overall the higher activity thresholds that come with them are going to generate a stronger fee market for Ethereum at the very least. In a natural consequence of higher activity levels is also the occurrence of higher gas fees being burned. In this last quarter, for instance, for the first time, we could observe a quarter in which ETH experienced deflation from pillar to post. So with increased activity in future bull phases and with a larger user base that the rollups might present, we believe that the deflationary nature of ETH will only gain a greater significance, if you will. Next slide, please. And also, finally, as far as fundamentals goes, one of the important things to point out is that prior to Shanghai in this last quarter, the interest in liquid staking derivatives or LSDs had spiked, and the performance of the governance tokens of these protocols reflected such a phenomenon. Other than Banky, which is a LSD for another asset, Avax, the native token for Avalanche network. So other than that one, protocols such as Anchor, Lido, Frax, and Rocket Pool, which are all LSD providers for ETH, they have had their governance tokens performing over 50% in this last quarter. So very, very strong price performance. And the only downside, perhaps the only yellow flag during this quarter was the notable resurgence in validator concentration in the leading staking, liquid staking provider, Lido. That's kind of a tongue twister, but it reached an impressive dominance around 31%, which is still something that it's going on right now with the network. And it's something that needs to be monitored in the upcoming months, keeping in mind that withdrawals, at least in Lido, for instance, will only be possible after May. So yeah, for sure, one of the things to keep an eye on for the upcoming months as far as the Ethereum network goes. Now, I believe that I will just go on over a little bit of the main metrics. Much like Lucas did, we had a natural decrease over the 12 months of main metrics due to price. I mean, Ethereum went down in price, so on dollars, and dollars being the denomination, it's natural that some of the metrics go down. But if you really think about it, and on a year-to-date basis, and mainly if you don't think of ETH in dollars, but if you denominate on the native token, most of the metrics are very positive, actually. If you think about price, market cap, ETH dominance, even the volume, those are coming back up. But mostly, the most important, the fundamentals, the ones that we're keeping in closer eye, as far as the ETH being staked, the number of addresses, the number of on-chain transaction fees being accrued in the TVL, the total value lock, those were very bullish for this last quarter. I believe I will hand it over back to Pedro.
Thank you, Yuri. In this part of the presentation, we just want to show you, the performance of the main hashtags indices, right? As I mentioned, NCI, the one which is the biggest and the most comprehensive index, market cap weighted. It grew by 60, close to 64% in the quarter. And this performance was led again by a 71% performance by Bitcoin, which is the largest by far. Remember, this is a market cap weighted index, followed by ETH. And then obviously we had some strong performance of these smaller tokens such as Sandbox and Filecoin with close to 75 to 100 and plus performance. But again, the concentration of the index is still into Bitcoin and Ethereum. And this is the list of all the indexes that our products track. And we just wanted to show you, again, a performance, the Nasdaq crypto index, a lot led by Bitcoin performance, and then its concentration, 64%. The DeFi a little below with 40, the Web3 smart contract platforms index, 65% up. Remember, this is Ethereum and some other layer ones that are part of this index. And lastly, the digital culture, which is the Meta here in Brazil, Meta 11 ETF that tracks this, mostly NFT related, metaverse related tokens, is up by 47%. We have all these metrics. You can look at the report and obviously contact us if you want to talk about any of these indexes and products that we have. So we're coming up, this is, the end of the presentation of the Market Pulse report, but we also brought to you, since this is a very big event that occurred last week which was the Shanghai update on Ethereum. It went pretty well. Lucas is going to explain to you a little bit, what has happened since this upgrade took place last week. Lucas.
Yeah, sure. Yeah, just wanted to go over a couple of slides showing what happened in Shanghai. So on the next slide, we essentially go over the first week after the upgrade. It happened last Wednesday. So in the first slide, we actually have the distribution of how ETH has been flowing into and out of the staking in the network for validation purposes. And it was activated without any hiccups on April 12th. So we are almost 1 week into this new phase where now Ethereum stakers can withdraw ETH they have locked to start validating and earning what we call this ETH's risk-free rate. So you can think of ETH now as this sort of digital bond that pays you a risk-free rate by doing staking and providing security for the Ethereum network. We already have seen 1.1 million ETH being withdrawn from the validation network on the Ethereum blockchain. And this is roughly the amount of ETH that most of the market were expecting to be released post-Shanghai. And the nice thing about this is that there were a lot of fears of a sell-off in ETH after the activation of this upgrade. But actually what we are seeing right now is that, yes, we are seeing outflows of ETH, but in this chart on the right, we can also see new deposits coming to the validation set on the Ethereum network. And as of now, we actually, after this little bit of correction in the number of ETH deposited, we are starting to see a backlog in such a way that new deposits are actually surpassing withdrawals in the past couple of days, which we believe is a very strong indication of renewed investor interest in ETH staking, and again, in this new risk-free rate into the crypto ecosystem. And the next slide, we basically show how the current queues for entering and leaving this staking network on Ethereum are behaving. So we have now around 560,000 validators currently active, and roughly 6.7 thousand validators trying to enter, and roughly 20,000 validators trying to exit. And it's important to say here that there is a queue, so not all of them can either join or leave at once. Today, we can have 1,800 validators entering and 1,800 validators exiting in such a way that the current net daily flow of validators is zero. So 1,800 in, 1,800 out. And I think perhaps beyond the best expectations of people going into Shanghai, what we've seen is that after the activation, ETH started to outperform the rest of the digital asset space. We actually have seen up until yesterday, ETH going up 11.2% against BTC, which, as we discussed before, was the outperformer in this first quarter. So ETH is starting to catch up, and I think Shanghai is really bullish for the long-term sustainability and strength of the Ethereum blockchain, because now it removed basically one of the last uncertainties in this transition to proof of stake, which was not being able to withdraw ETH once you deposit it for validation purposes. Now you can unlock your ETH. And we believe that in particular for institutions, this is really important because now they can engage with this kind of participation on the Ethereum network, because they have this predictability that once you deposit ETH, you can earn a annual yield on top of your holdings. But if you need to withdraw, there is this option now. And this, as is being remarked by both media vehicles in the space, really concludes the transition that Ethereum had started during the merge last year. And now the transition to proof of stake is finally completed. So I think that's this is just a couple of slides, like giving this update on what has been happening over the course of the past 7 days with Ethereum. But overall, I think it's really positive for Ethereum and ETH, and we look forward to what's going to happen in the next several weeks and months for Ethereum. I think this is it. And maybe we can start addressing some of the questions that we have in the Q&A.
Yep, that's exactly right. Thank you, Lucas. Appreciate it. Fantastic report, everybody. In case you had an interest in reading the report, I put it in the chat, as well as go to our website, hashdex.com, and go to the Insights page, our primers, and you'll find the Market Pulse Q1 2023. As Pedro on the outset mentioned, it'll be a quarterly report, something that we are going to be producing on a regular basis, obviously. So keep an eye out for that on our website, as well as we'll be emailing it out to all of our subscribers that way. As a reminder, there is a question and answer session now. Feel free to submit your questions. We do have some coming in already. The first question is a question about the Lightning Network. From your analysis, what what will be the role it will play in the next year as global payment method against, for example, Visa or other players like it? And I'll give that to Lucas.
Yeah, sure. Yeah, that's a great question, because as I commented, the Lightning Network is this leading scaling solution for Bitcoin. And what it does is basically to allow you to transact in BTC without huge fees and without having to wait for the usual 10 minutes for a block confirmation. And we really believe that, I mean, we have been seeing the growth of the Lightning Network over the past couple of years, and it has been really, really huge, this growth. And now it's basically a matter of services and applications starting to integrate the Lightning Network in their technological stack, so to speak. So we've seen last year, like for instance, Cash App, which is this 40 million plus users app in the US that now allows people to both send and receive Lightning payments and using Bitcoin. There's another thing which I really find interesting, and I think we should keep a close eye on, which is essentially the ability, and I think this will perhaps become possible later this year or early next year, the ability to transact stablecoins using the Lightning Network, but now stablecoins that live on top of the Bitcoin base layer. This could be possible, for instance, with the novel approach to other assets on the Bitcoin base layer through the so-called Taro protocol, which allows you to issue different tokens and transact them using the Bitcoin base layer. And why is this important? Because once people have these assets which are secured on the Bitcoin base layer, which is a really secure network, and now you have the ability to transact these assets over a really fast and cheap and very secure as well layer 2 solution, which is the Lightning Network, then I would say that we are in for a new wave of adoption and usage on the Lightning Network. And if you compare it to Visa, Visa can do roughly like 24,000 transactions per second, which is really high. And this is something that the Bitcoin network cannot do in its base layer. But if you go to the Lightning Network or other scaling solutions, we can actually start seeing this level of transaction per second on the Bitcoin network, for instance, in the Lightning Network. And then we start seeing some competition eventually happening with usual payment services such as Visa and MasterCard. So I think these things are starting to play out. We still have a lot of infrastructures to be developed, but the initial steps and the technological stack to allow this to happen is already getting started. And I think we should really keep a close eye on this for the next several years.
Yeah, I'll just add that Visa and MasterCard, obviously these two major global payment companies in participating in more than 150 countries, but they have two businesses, right? They have the debit and the credit business. So most of these payments are targeted for debit payments, right? Everything that's related to credit, that someone willing to lend money without any collateral, which is basically what the credit card business is a different thing. But what's interesting about the Lightning Network and all these Bitcoin solutions is that there's something new going on that is super. It looks like it's going to be super competitive, and people are bringing new solutions as stable coins, as Luca just mentioned. That it's going to be, you can be eventually be paying in dollars, for instance, not in Bitcoin, and to the Lightning Network, and as people get used to it, this has a lot of potential. So it's the point is that it's going after a very, very, very large market. Visa and MasterCard are these two, very, very big, with mostly 50, 60 million users and clients on each. So it's quite interesting to follow this issue.
Yeah, no, I think that's great insight. The question I have as we have the Q&A here, one of the things that we often get asked by investors is taking what we know about the previous quarter and applying it to the investment case as we go forward. What we've seen is a sort of a decoupling of Bitcoin, for example, from traditional risk assets and equities, which has sort of been something that's talked to us about the use case for proof of, for Bitcoin particularly. My question is, what's the one or two things that we've seen in the previous quarter that you've outlined in this report that we're looking at, particularly around the investment case that's associated with risk. Investors obviously are very concerned about the global macro scenario of a potential looming recession. That's something that hasn't gone away particularly, and there's a separation from risk assets. But obviously, we haven't seen that in the crypto ecosystem. If anything, we've seen the opposite, right? So what's the one or two particular things, question for anybody, that we're looking to associate the global risk scenario versus the crypto investment case?
Yeah, I can take that one, Chris. So in my view, in our view here is this is an asset class, brand new when compared to the others asset class. It's still in the early phases of development with several aspects being highlighted, such as we're still building the infrastructure of it, and users are still in the low millions. We hope this will reach hundreds of millions in the future, and so we're in this phase of try and error in several fronts of the crypto space. So and at the same time, this is a 24/7 global asset class that everyone can trade, and it's easy to trade. You can do it on your phone, and people have access to through their Robinhood in the US and easy applications in several countries, and it's still dominated by global flows, right? So what we're seeing, global financial flows. That's what I mean. So at the same time that last year was a big reduction in financial flows, led by in the US and in Europe and other countries. This affected prices tremendously, and the same we're seeing on the reverse side now in the first quarter of 2023. As the some recession talks in the US, although inflation is still sticky though. But with the banking crisis, on the margin, we saw the global financial flows improving again, and then we saw that affecting prices of digital assets, and in parallel we're seeing all this infrastructure being built. One of the main risks that we were investors were following, and that's partly the consequence of Ether underperforming Bitcoin especially, but still going up because the flows were positive, was this Shanghai update. It was a slightly less complicated topic compared to, for instance, the merge, which happened last year, and it took mostly close to 6 years to be fully deployed. But it's still a risk on the radar of investors. It could go wrong. It didn't, and it would reduce the liquidity issue. So now we're seeing investors looking at it again, especially institutional investors looking at it again. There's yield to be made in Ether. There's this old new approach to Ether becoming kind of a risk-free asset of the internet. And obviously, we're going to have to be closely following what's going on in the U.S. regulatory environment, Chris, because it's all over the news. Especially the SEC has been very active, engaging and tackling issues within the crypto space, but there's still some regulatory unclarity right in the US that needs to be tackled. This is something to be paying attention. Although as I said, crypto prices don't seem to care anymore. So it's part of what it came down a lot last year, but there's a lot of strong developments, and especially the store of value use case in the middle of this banking crisis globally, plus Ether becoming less risky in the short term. So long story short, that's probably that's mostly how we see the markets, and something that we're going to be paying attention to in the coming quarters.
And Chris, maybe just one quick comment to piggyback on top of what Pedro just said. If you uncouple the term risk, from risk within crypto and risks outside of crypto. What Pedro just said, in my opinion, at least, it relates to investing in crypto in general, what it pertains. But if you think about risk within crypto, back in the day, BTC had Litecoin and other alternatives back in the day. Those have slowly but surely vanished. Ethereum had Solana, Avalanche, and other alternatives up until recently, and those seem to slowly but surely also be vanishing. So one of the things that once the investment thesis in crypto overall matures is that you have those flagships, you have those blue chips in which you don't have to take extra layers of risk in order to have a good long-term investment. So if what I would say about this last cycle, at least, is that if we had in previous cycles BTC establishing itself as a different asset from what we had back in the day, what we're seeing right now is also the investment thesis on Ethereum becoming more solid, more robust, and also it still has a lot of upside, but it just seems to be a less risky investment as the day goes on.
That's great. And, that's a fantastic transition regarding Ethereum. We have a question in the chat regarding Ethereum. What are some of the potential use cases that could emerge from the next steps in Ethereum's development, if they can be predicted, and how might they impact the blockchain's overall functionality?
Yeah, I can take that one. Yeah, I can take that one. As far as use cases go, I believe that what we expect to see from blockchain applications in the future is not really much different in a lot of ways from what we already see in Web 2, the current phase of the internet that all of us are accustomed to right now. So the idea is that you can settle this information in a more decentralized way. You can own part of the ecosystem that you're being part of. So think of social media. Social media right now is a responsible party for generating hundreds of millions of dollars, billions of dollars, and that is not something that overall you have a lot of control over, the intellectual property that it's being built atop of. So one of the cool things about Web3 is the idea of you being able to own that IP. So this is one of the very interesting use cases, in my opinion. The idea of everything that we build right now and we don't have proper ownership of, having the opportunity to have ownership of that in Web3, that's one of the positives. And then if we're thinking about the latest developments, well, like I was saying, one of the reasons why Ethereum right now is a more secure, rock solid investment for the long run is because people are not trying to compete with it anymore. They're trying to build scaling solutions on top of it because you already have a decentralized, secure way to store that information. What it used to lack, however, in somewhat it still does, is the ability to do that with lower costs and with higher thresholds, a higher throughput, right? So one of the good things about the future is the idea of using, like I said, the internet like we do right now, but without having such high costs in order to settle transactions, in order to settle that information. So basically, it's going to reduce friction. That's my educated guess, if I would say anything.
Yeah, and just to add on top of that, I think now we have this bunch of use cases for smart contracts. So we have DeFi, we have NFTs and all that stuff. And these were more or less tested and stress tested in this past cycle, but we were still in this dial-up phase of all of these applications. And as these scaling solutions really start to ramp up and bring a lot more ease, speed, and low transaction costs for end users, then we can really start seeing all of these applications shine and to reach perhaps 1 billion users in 4-5 years period. So I think that's we are looking forward to. And these upgrades, Shanghai is like a first step, but later this year or early next year, we can see a new upgrade that will decrease even more the cost for these scaling solutions to operate on top of Ethereum. And then we start seeing this broadband phase for crypto and this all of these applications to really reach billions of users.
Yeah, that's an excellent point. It looks like we don't have any more questions. So I just want to thank everybody for attending today. For the market pulse or anything else regarding our thought leadership, please visit our website and go to our insights page. With that, we'll end the webcast. Thank you all for joining and have a pleasant day.